There we go. All right. Do you guys hear me?
Yep, we can hear you. We can see you.
All right, cool. Should we get started, Mike?
Okay. All right. Yep, we'll get started. Recording's in progress. All right. So welcome everybody. Thanks for joining our monthly lunch and learn. Today we're going to go over how to leverage your lender to get your offers accepted in this unusual market.
Yeah, I'd say like it's probably hardest market we've ever seen. I would say for most of us in terms of buyers and trying to get offers accepted and things along those lines. So I felt like it was probably worthwhile to do a quick call on it,
Okay.
kind of figure out some strategies that are working, some things that we've been doing that are
So
beyond
what's-
normal, not super unusual, but things that I think will certainly help you guys. And we're up for it as long as you guys are. So we'll go through some of those. I also want to mention, like, before we start, on maybe like a new program or two that are out that I think might be interesting. So this is a good thing to start with. We have recently, like, it's only been about 7 or 8 days, but we've locked numerous loans with it. Picked up a great jumbo product that I think will help in really the suburbs and in the Hudson County condo market for buyers that have 20%, especially ones that are borrowing less than $1 million. So like those clients that are borrowing from like 650 to $1 million, we're seeing like some amazing fixed rates on 30 years, very similar to like banks. We've actually like matched up with a few like the Bank of America type loans, which has always like been the age-old problem with direct lenders, in that we're obviously way better when it comes to service and closing, but they sometimes have an advantage when it comes to a rate by 1/8% or something. Well, now that gap seems to have bridged out really well. So what we're seeing there is, for your, 8+ clients, solid clients, say, good old 30-year fixed. I mean, you're seeing some amazing rates like 4.625, amazing in the current environment compared to like where conventional rates are, which are over 5%. So in that sense, it's been a huge help. The best part of the product is if you're in the suburbs, they'll also let you do 15% down as opposed to 10. And the only difference is 1/8% on the interest rate. There's no PMI. And so if you have a client buying like $1 million house, they can basically borrow $850,000 and get a rate that's under 5, which is way better than what they would get in a Fannie Mae conventional market. The other product that I like a lot, and I'll send stuff on this to everybody, is another jumbo product where if somebody's selling their home, we won't count that payment on the home that's being sold against them, as long as they meet all the other requirements, obviously, of the product, as long as they have enough reserves to cover 2 years worth of payments. Example, their payment on their departing residence is $5,000. As long as they have somewhere a little over $100,000 in reserves, and the reserves could be a 401k, which a lot of people do have significant money in their 401k, we would not count the $5,000 payment, even if they just listed it and haven't sold it yet. That's a huge advantage because it can avoid a contingency. It can help a client qualify that wouldn't have otherwise. And the rates on it are also really good. It's through a bank, so it's real solid. And so those are 2 new ones that we just added that have come in really handy, because again, it's given us more options and it's given us some things that we can do. That's again both available in the condo and single family market. So yeah, we'll get back to the presentation. Mike, do you want to just go through it a little bit? Cool. For anybody that doesn't know us, I'm Baret. I'm the branch manager for our team and kind of like the team lead. Mike is the sales manager on our team. And so we're both available anytime. We also have a team of 5 licensed loan officers that work on our files. So there's usually someone you can get anytime you need. The main things I want to go over today. So a couple of things. The difference between lenders, banks, and brokers. If everybody doesn't know, we are a direct lender. So that is that we underwrite our own loans. We close our own loans. We can make decisions. We can make gray area calls. And we have numerous products in our umbrella. So that is what a direct lender is considered. A broker is someone who also has products, but they have to send each case directly to wherever they're placing that loan. Significant difference, because when you're a broker, you do lose control of that loan a little bit. And you have to send it to a third party, and it's on their timeline that you're working. So if they get busy, they get a lot of files, and you're not one of their top brokers, there's a chance that you may get delayed. And each time you send a file, you have to send it to each product separately. Whereas with a lender, the one advantage is, we can switch products internally and it's the same underwriter and it's literally just a different set of guidelines. So it makes it super easy to kind of maneuver. We've had cases where a client called us and said, hey, this just happened. Is there anything else I could do? I can't do 20% down anymore. And we can easily flip there to a different type of loan and try to accommodate without having a huge bunch of time go and without having to necessarily send that file to another party and kind of start from scratch, which is cool. So the appraisal is good for any of those products, but also it really puts us in an advantage position when we have to react quickly. And sometimes that happens. An appraisal comes in low, which we'll talk about in a little bit. Rare, but still it happens. Let's say, client loses their job or changes jobs, which we've seen a lot. We'll talk about that too. And where they're wrong on stuff like that. Those things come in really handy, for us to be able to do. And the bank obviously is a depository. You can actually deposit money in addition to them doing mortgages. They are considered also like a direct lender, but they only have their own product. So they can't go to a third-party product internally. So for example, like whereas we can have products from Citibank, TD Bank, Wells Fargo, Chase, and have access to all of those and underwrite them ourselves. If you go to Chase, they have Chase. So if you don't meet Chase's guides, you don't meet Chase's guides. If you need a rate extension, you need a rate extension and you have to go by their policy. Whereas say with a lender, some of the advantages we have is that we can simply just switch programs and start the lock over as long as the rates are cooperating. So just a couple of things to think about. So the main things that we want to talk about that I think come up in making offers today, that'll hopefully help you guys win a couple. Appraisal waiver. I know you all have to talk about it all the time and we have to deal with it. How to kind of like leverage that with your lender. Quick closings. When can we go fast? When can we not? What would help us go faster? And some things you guys can do on your side to kind of work tag team to help us do that. A pre-commitment. A pre-commitment would be like a loan that's actually underwritten up front before the client even finds the property. When can we use that? When we can't. What underwriters generally look for when they see a file. We have our operations manager, Cheryl Hammond, who's on the call today. I'll kind of kick that off to her when the time comes because, she's as good as it gets. So, as an example for our team, like when we have a question or a gray area or something that comes up front, or if we need to have a loan close quickly, I'll literally just give her a call and just kind of check on number one, capacity. Number two, we'll kind of go over the loan and make sure that we can timeline it fast. And then at that point, we'll go back to the client, tell them exactly what they need to do, and then execute. And so we had one last week, for example, that Mike actually handled, where a client lost out on a deal the day before their closing at 1400 Hudson because Wells Fargo, due to the litigation, decided that they don't want to do the loan the day before. No joke. Came to our office because he didn't even want to talk on the phone. He wanted direct attention, wanted to meet us, whatever. So he came to our office on a whim on a Thursday. That deal closed in about, I think, 8 days. And it was committed and clear to close in 4. Again, we told the guy we're going to move quick. I didn't really promise 4, but the deal was easy. There was no appraisal needed. We've done 1 million loans at 1400 Hudson, so there was no condo approval needed. The guy got us everything on day 1. We got it to underwriting on day 2. Underwriter approved it on day 3. It was clear to close by day 4. So it can move like that. And so if we have something where we have to save it 10 days, 15 days, it's all doable as long as we have a game plan and you're committed to it with us and going over it with the client. And then some of the red flags that I'll warn you guys, as you're taking clients out, if they haven't been pre-approved, shame on you. If they've been pre-approved, but it's Rocket Mortgage, these are things to keep an eye out for. When those online banks are doing the pre-approvals, a lot of times they're doing them, unfortunately, without even checking income or even talking to some of these clients. They're doing it off of what they input on the initial application, and they're telling you that right on the letter. So they can get out of it easily with no issue because they're telling you on the letter that they didn't review anything yet. But it's really, I hate to say it, not worth the paper it's written on. If you saw how wrong the applications are when they come into us, how many additional income sources people list, how off they are on their monthly income a lot of times of what we're able to use versus what they put in, it's uncanny. So I would 100% say, like, make sure whoever you're using for mortgages absolutely is checking some of that stuff because there'll be so much variance from pre-approval to closing. Right before this call, I got a call from an agent that said this client got turned down for a 50% down loan after 10 weeks. And because of debt to income ratio, like that's almost an impossible thing. Like you would have had to literally either be completely surprised by something, not ask, or just simply use the wrong income the entire time. And so it's as, you know, it's as sloppy as I can imagine, and this will avoid that. Mike, we can go to the next thing. We'll pass by the introductions. Actually, maybe we'll introduce Cheryl. Cheryl, tell us about yourself a little. How long you've been doing this? You know, kind of like tell everybody what your role is for our team, and kind of what I think you're one of the main pieces that differentiates us between a lot of other mortgage teams and why we're as good as we are. And so I'd like you to at least give us an introduction. You're muted. Oh, Mike.
I'm good. They know I talk too much, so they control my mute button.
Right.
Hi, everybody. My name is Cheryl Hammond. Thank you for having me. A little bit about myself. I'm the district manager for the Hoboken and Paramus office. Prior to that, I was managing about 14 branches. I was a processor for a very short time period, and I went right to underwriting. I'm an underwriter first and a manager second, to be totally honest. I love underwriting. I love problem solving. As Baret mentioned, the niche that we have is that when you have a lead or something that might be questionable for income guidelines or anything, we can vet all that up front so that you know when you have a pre-approval, it's really solid versus just generic. And that's what's really key here. We're a big company, but we've managed to be a really small family within this big company. So I have direct access to the underwriters' credit policy. Many of the investors, I can submit my own exception. And that's really where we excel here. So I felt like that was more important than you guys knowing how much I gamble in AC on the weekends. But, but that's pretty much why I feel that our team is special. And sales cares about taking a good app, making sure they have all the facts to present them to me up front. And then we just have a smooth, clean process from there on out. And it's much easier to manage the pipeline that way.
Yep. If I see questions come up, I'll answer them as we go. Maureen, I saw your question about how much time does it take to do the underwriting up front. We had one on Friday where they wouldn't get out of attorney review unless we did the underwriting, and we had it back in 24 hours. If it's a conventional loan, it goes easy. If it's a jumbo, it's a little bit harder simply because, on a jumbo, we don't love doing it because it is a lot more time consuming. But if we had to do one because of something, we would do it probably in about 48 hours, let's say 2 days, or at the most 72 hours. The client would have to provide us all their documents though. In order to submit a file to underwriting, it's got to be complete. So that's the only thing I would say. Mike, we can go on to the next one. Yeah, we passed it. We can pass this too. We talked about it already. So let's talk about appraisal waivers. This is the big one, right? So obviously every one of your clients that are dealing with putting an offer in a competitive market probably has to give some concession on their appraisal. So I've seen some people waive the entire appraisal. I've seen some people put some sort of appraisal floor. And then in some cases, they can't waive it at all. So that conversation should be probably had up front. And to me, it's a better conversation to be had with the agent on the phone as a conference call, because one, if you come to me and say, hey, what can we do here to make our offer more attractive? So what I look for is, if we're dealing with a conventional loan, which is a loan that's below 647,000. And in certain markets, you can go up to 970,000 for the same thing, 647 and under. If somebody has 20% down and they're asking me, hey, what can I do about this appraisal waiver? It's an easy question, because we can basically say, look, you qualify for 5% down, and even in some cases, 3%. So you can easily waive 15% of the value, which probably will never happen. Like, the odds of it coming in 15% lower, so slim, but you can waive that. And the only difference to you as the buyer would be that you would have to pay mortgage insurance, PMI. So when we look at that, the way we've done it in the past with some of the teams that have the most success is we've actually provided a pre-approval with 20% down, because that's how they plan on making the offer, because they have it. But then we've also provided the same client the same pre-approval with 5% down. So the seller can see that they don't actually need to have extra money to put down. because they qualify for a 5% loan, which means if they waive 15%, they're able to do it because they have 20% and they're qualifying for 5. So that means we can make up that gap simply by lending it to them and giving them the same loan amount as they originally applied for. And the only difference to the client, which is a bummer that they're putting 20% of the actual price, they have to pay mortgage insurance anyway, but that's their risk. So to me, that's fairly minimal, and most people are pretty agreeable to it. Let's say they don't have 20% and they only have 10. Obviously, the amount of waiver goes down. You can only give up 5% at that point. Can't do 15 anymore. If they only have 5% and they have no other money, you just can't waive the appraisal at that point. They're just going to have to take their, kind of test their luck with offers and hope for the best. It's not easy. When we talk to them, we say, look, in a worst case scenario, do you have any other money you might be able to contribute? Is there a family or something that can give us a gift so we can at least put a small appraisal floor, 20,000, 25,000. Some cases you have it, some cases you don't. So it's, that's the conversation. Where it gets a little tricky, and this is where like the conversations have to take place, is if they're doing a jumbo loan. So if these guys have, they're buying a $1.5 million place and they have 20% down, and then the appraisal comes in low by even 50,000, in order to get the type of rate they're getting, they're more than likely going to have to make up the difference. And so that's the conversation we have is, look, in a worst case scenario, if this happens, can you put up an additional $40,000 if it came in 50,000 low? We can get them the money after the closing, give them a line of credit or something. But for the time being, they'd have to come up with it. There are programs with less than 20% down, but they won't get that same rate they would have gotten otherwise. And so that makes, I think the biggest difference is that on a jumbo, it affects the rate a lot more if you decide not to put the extra money down and decide us to finance the difference. On a conventional loan, it's just PMI. So that's the kind of conversations we can have. And then the key is we can relay that to the seller's agent very easily. I would 100% offer us to have a conversation with them. Put us on an email together as you make the offer and just say, hey, listen, this is the lender on this. They're one of the top 10 teams in the United States, so we're using somebody legit. Feel free to call them and they'll talk to you about, what's going on with this offer so you can feel confident taking it. And so hopefully at that point, once I have that conversation, I'll be able to explain everything pretty clearly to this list side, and hopefully they'll feel confident with the offer. The more documentation we can get up front from the clients, the better, so that when I have that conversation, I can guarantee you they're going to ask me, have you seen their assets? Have you seen their income? Especially in a competitive situation, it just makes sense. So a lot of times when you're having that initial call, what could you do as a realtor? Listen, if they need stuff from you, I know it's a pain in the ass just to make an offer, but do it because it's going to give us a better chance of getting that offer accepted. So if you, get them the income, get them your bank statements up front, not because you don't have time to do it later, but because it's going to make your offer that much stronger. Because then on the letter itself, it specifically says income and assets are both verified. And if we want, we can go a step further, as we said earlier, and actually get it to the underwriter. If you think you're in a market where they keep losing deals, then we have to do it. We have to do it. So that's, again, in a time when we may not have as many refis and stuff, this is the time to take advantage of stuff like that. If we get busy and lenders overall get busy because rates come down and refinances come back, they'll never be able to offer pre-underwriting for deals that aren't necessarily in process. So that's a big one. Mike, do you want to go on to the next one? Any questions along the way that we didn't answer, by all means, shoot them out. Is there any that we haven't answered yet?
No, they've all been answered so far.
Okay, cool. Quick closings, right? To me, that's a big one. If you go in an offer and you say, look, we can close in 30 days, we can get you a commitment in 15. I would think that gives the seller a little bit more positive, vibe versus, somebody offering a 60 or 90 day, or like with a bank pre-approval where, there's no way you're getting a real commitment in a short period of time. So, the keys there, and I'll have Cheryl also jump in at some point here, like having all the documents submitted for the pre-approval like we talked about. That's an easy one. We can digitally document assets, for God's sakes. All they have to do is go into the digital, link their account, and we can see their 60-day activity. Can't make it much easier than that. For their income, most W-2 employees, which is what we see, say 80% of the time, can literally send 2 pay stubs of a W-2 if their income is also not digitally verified. That's a cakewalk to me. There's no reason not to do it. If they're on a work visa, get us through visa documents. Let's look at those up front too. So there's absolutely no question marks about anything with your file. other than maybe a condo, which again, we usually know most of them, so we can, kind of take that one off the table too. And so that's a big one. In order to close quick, obviously, you guys have your favorite attorneys and all that. Stay involved so that that attorney review ends as quickly as possible, so that we can get past inspections as quickly as possible, because that'll help us get that 30-day closing done. Having communication with us up front is huge, right? So like for me, when somebody sends me a contract, and then you're like, okay, yeah, hey, we're out of attorney review, and that's the first time they call us since the pre-approval. Sometimes we look at the dates and we're like, holy Jesus, this thing's closing in like 3.5 weeks, no heads up, no nothing. And I'm like, what happened here? He's like, well, we had to put a quick close, and attorney review took a week and a half. And so now we're way behind schedule, especially if it's a jumbo loan and we're scrambling. Whereas as a realtor, if we had that conversation up front, or they said, hey, they got their offer accepted, just so you know, it's going to be a quick close, I'd get that attorney review period as a head start. I'd get every single document they could possibly need. That way, that file's going into underwriting on day 2. Cheryl, would you say like that's a fair point? If you're going to mute, like. Yep.
Definitely. And in cases too, we had a deal actually yesterday where it's a flight attendant with they get advance pay and different types of pay. So we were trying to determine income, and at the end of the day, DU validated the income for even higher than what we were both getting. So I was just using that as a starting point. I start there. Do we have the work number? What is AUS validating? Because if they validate the income that supports what we need to qualify, we're done. And
DU stands for Desktop Underwriter, which is Fannie Mae's system. So Fannie Mae and Freddie Mac both have an automated system, which is what AUS stands for. And so we run the files through there, but data entry is critical. Like you have to make sure you put in the right numbers, because you can have a false positive if you put in the wrong one. So if you put in an income that an underwriter would never accept, even though you have an approval, you're going to get the wrong income. And so what Cheryl was saying is that like we actually had automated approval on that. And in fact, like the system through their algorithm even assigned an income to it that they would accept without us having to document any further. And we didn't realize it at the time until we read it. And so we didn't have to go any further, and they were acceptable. So they accepted $4,000 a month, and we don't have to do another thing. So if you have something like that, that's closing in, you can close that in no time, if we have income validated. We have, one I just talked to a realtor about a few minutes ago. The file came in on 5/31. We had a commitment by 6/3. There was no appraisal needed. The income was digital. Client got us all the, supporting documents. And it's not like there's no reason not to. Like sometimes we get calls of like, is this real? Like, is this a BS commitment? And we're like, no, it's actually real. Like it's been underwritten. There's nothing to it. There just wasn't anything else needed. So there's no reason not to issue it. It sounds crazy, 4 days, but it's a real commitment. I saw the question come up about what's the fastest you can do a closing. I would say if it's non-jumbo, so if we're doing just a conventional loan, I mean, if the attorney's quick with ordering title and the deal's clean, I can't imagine it taking more than 3 weeks. And I'm only giving that because the appraisal has to come in, and sometimes they take a week or something. And lately, even the appraisals have gotten faster. We received a deal from an agent in the suburbs just this past week because another lender had underappraised the home. And so we're starting over, and it was going to die because the sellers didn't want to give a chance. And all we said is like, hey, can you just give us until the original date of when the appraisal was due? And they did. The appraisal was done on Monday. We literally got it back last night, and we're going to save that deal. And it appraised fine with no problem. And so I think, Raf, if I said 3 weeks in a pinch and that would help you, no doubt, I think that's comfortable. And if it was a loan that was 647 and over, I'd say 30 days is still very doable. The only times I won't take something like that on is if you have a client that's like self-employed, has multiple businesses, hasn't filed their tax returns yet and needs to, where we're counting on stuff still coming in. They're waiting on gifts. They can't liquidate their assets in time, so we're going to be super last minute. I think those cases, if we can see those up front, we'll kind of give everybody a heads up and say, hey, don't do this. Like you don't want to have a client liquidating their stock, which we are going to need for the file, let's say, 4 days before the closing. I mean, talk about a last minute shit show. Like that will turn into one if they do that. So we try to tell these people, look, I know you're trying to play the market. I know you're trying to get top dollar for your investment, but you got to do this like 10 days ahead to give us time to gather everything, You're gonna have to document a new statement for us or some sort of printout. Let's get it to the underwriter, let's clear it, and let's have plenty of time for the closing so we can send a CD and all that. So those are the only times I'm not taking on 30 days is if something is odd about the file. Mike, do you want to go on to the next?
Yeah, one other question. Carissa asked, how long does title typically take?
How long does what?
Title.
Title. I mean, I've seen attorneys get title in, 3 or 4 days on purchases, depending on the relationship with their title company. But some of them, especially if they're people we don't know, won't order it up front until there's a commitment. And if you're waiting, like if you're doing a 30-day closing and the commitment comes in, sometimes, it ends up being a little last minute. Generally, I would say it makes sense to wait until at least the inspection is finished, so you know that the client's going to move forward. Because a lot of times that, there's cancellation fees and stuff for title that, the title company has to eat or somebody might get charged for. So they try to, wait for that. But I've seen it come back in 4 days. I would say generally a week would be the longest I could see for title. And for us as a lender, as long as we get title at least 4 days before the closing, we could potentially get a CD right out and then still close. The ideal scenario would be maybe 7. Like a week before closing, if we had title, we're happy. So just to give you guys an idea. And same with insurance. A lot of times insurance, clients are waiting till the last possible second. The reason sometimes they have to wait is the insurance company wants to know the closing date. And so if they're still going back and forth on closing date, maybe a CO they're waiting on or something, they are kind of last minute, but we can usually adjust there. As long as they give us the quote they got and what they're looking at and we know the amount, as long as they got us that and they finalize it even a day or two before, we're okay. Just to give you an idea. I think I saw a question from Michelle popped through about 90-day locks. We're still doing locks up to 180 days. The good stuff, which I consider the jumbo loans, which everybody wants, so like if they're buying like an $800,000-900,000 house, they never are going to choose the conventional option versus jumbo right now. We can go up to 120 days. It's usually a 60-day lock and 2 30-day extensions, and we just price those extensions in to make sure that there's that they're covered so that the client doesn't have to pay for them. So we'll tell them, look, if you close in 60 days, here's the rate. If it goes to 90, here's the rate. If it goes to 120, here's the rate. And it's usually an 1/8 up every 30 days. So that's kind of, and then the client always has an option of paying for that extension as opposed to paying the higher rate. So we kind of just discuss it up front, lay out the plan. And if it's something where they think it might get delayed, but it's not a definite, that's the right way to do it. You don't want to be paying something up front that might actually close. So do it 60-day lock and then just be cognizant of those extra extensions. And that's all communication up front. Like we don't get too many calls of people going, I can't believe there's an extension fee, like because we've already discussed it like in the beginning. And we try to do that every time so that there's no question marks, there's no gray area. So as clear as we can. So kind of like the pre-commitments that we talked about. So in case we can do this. So what happens is like we'll gather everything from the client. They'll obviously do their pre-approval, and then we won't have a property. So the property will just say TBD, and then the underwriter will review credit, income, and assets to issue the commitment on the property. You really have to be documented well, or else again, just like a bad pre-approval, the pre-commitment won't be worth the paper it's written on if you send in the wrong stuff or you get a surprise. So that's why we ask for everything up front from the client to do these. Then we have the option, if it's a conventional loan, of also locking the rate if they prefer, up to 90 days. And do a lock and shop. Again, conventional FHA, VA, that is possible. Jumbo, it's not. So not every offer. And to me, I think if you have a pre-commitment that says, underwritten, shows the conditions, and the conditions are literally just title, insurance, and appraisal. I don't know. If I'm the seller, I don't know how much stronger it can get than that. I mean, obviously the appraisal is always going to be a worry, but it at least takes everything else off the table. So there are times you can do that. But I think sometimes like a approval letter that has everything documented might be good enough too. Depends on the area. Like I think in Hudson County, people know us enough that they're pretty comfortable with us. We're getting that in some of the suburbs too now that people have worked with us for the last couple of years. I think in Hudson County, we have enough of a reputation that a pre-approval should be sufficient from us, especially if we verify it. But in some of the suburbs, especially where it's more competitive right now, where there's multiple offers, a conversation, potentially a pre-commitment, maybe a write-up in addition to the pre-approval with some bullet points about the client that you can submit, similar to how you guys submit that with your offers. Can't hurt, whatever it takes. I see some more questions, I think, in the chat.
Yep, just one more from Vishal, asking about the jumbo loan amount. He said, is it 840 and up?
So jumbo would be, so any loan that's 647,200 and above is eligible for jumbo. But let's say they don't qualify for jumbo. Fannie Mae goes up to 970,000 also. But so anything above 647.2, you have a choice, jumbo or conforming in this area, because we're considered a high cost market. So that's like an $810,000 price on a condo with 20% down, or on a house with 20% down. So that would put you right above that limit. So lately, when we've had that, obviously we're doing everything we can to get that client qualified on a jumbo loan so they can get the better interest rates. Where does it differ? It allows us to do some really good ARM options. A 7-year and 10-year ARM comes into play once you enter the jumbo realm. The fixed rates are probably better than conforming by a half a point. And so, you know, a client could literally get the same monthly payment on an $810,000 house with 20% as they could on a $760,000 house with 20%. Why? The 760 is going to come with a higher rate because that's conforming. The 810 is going to come with a lower rate because it's jumbo. So like they can literally go up 50,000 on price and not pay any more per month, as long as they can just put the 20% down on the extra 50 grand. So it's, you know, again, when we talk to clients, we're mentioning all this too. You know, if I see a guy that's shopping in that 750, 760 area, and you can tell like he doesn't, I just tell him like, listen, if you want, talk to your agent and see if you want to go up to 810. If you have the down payment, your rate's going to be so much better. You're not even going to pay anymore. And we've had a couple of people do it. We actually had an offer accepted the other day that literally paid exactly 810 because they really wanted the house. And they said, yeah, I mean, you know, we can do an R. It's the same payment. And they were up. So it's, you know, hopefully that helps along the way. Some people just don't realize it. So it's really more just educational, and that's, you know, that's the big help. I don't see anything else question wise. So,
Nope,
you
no
know,
other questions right now.
And Cheryl, if you want to unmute on this and jump in on some things you see that come up, you know, mid-process from, you know, over your career, because we don't have anything that gets messed up. You know, throughout the career, like things that can come up. So first, I'll talk to you about your age as agents, like in the beginning of the process, some things to keep your ears open for. If you're taking somebody out and they go, oh, hey, yeah, my parents are going to co-sign for this or whatever, that's not an automatic. So make sure, like, if they mention anything like that, double vet their pre-approval, get them in touch with us so we can talk to them about it. That's not like co-signing for a lease, where it's just like they put their name on it as a guarantor. They are literally going to be applying for a mortgage. And sometimes like kids are like, oh yeah, my dad is so rich. Like in their mind, they're like, yeah, my dad is, he doesn't work anymore. He's retired. And so now you're making the poor dad like take money out of his IRA and stuff just to freaking qualify for the loan because the kid already like overpromised. Like that's a great conversation to have day one, not after they've had their offer accepted. And I'm talking to a pissed off dad that didn't realize he was applying for a mortgage, because that's exactly what he's doing. If you hear as you're taking him out, oh yeah, I just recently started my business, it's going great. The part that's bad there is recently. You know, with self-employed people, you need a minimum history of, I mean, 1 year bare bone minimum in certain cases, but really 2. Like you need a 2-year history of self-employment. If they don't have that, that could be a huge problem. We've had people that make a lot of money, but they literally went from an employee to a 1099 and we couldn't help them. You know, and they chose to do it because they were going to make even more. So it's not a bad thing for their career. It's just bad that they applied for a mortgage right as they did it. So that's a good one. If they say they recently switched jobs and they're coming here because they're moving or whatever, do not take them out without a pre-approval. And a good one. Why? I can guarantee you, when they fill out our application, they could be at the job for 10 days. They are going to put in their potential bonus as part of the income, just like they're going to put it in for Rocket Mortgage, except Rocket's going to use that bonus. We're going to know we can't because they just started the job. That's really important. They fill in commission, they fill in bonus, they fill in their restricted stock. And like they make it seem like they're going to make all this money. And the only thing that's usable on a new job is their salary in most cases. You can't use a sign-on bonus. You can't use any of that stuff. So critical. Is a new job a death sentence? Not at all, as long as they qualify with their guaranteed pay. Cheryl, I think we've had probably 5 cases in the last 6 months where people change jobs during the process.
Definitely.
Go scrambling. Right. So those are killer. We'll talk about that and the things that happens in process. And the last one is the contingency thing. I've seen a lot of you guys put in offers and they're like, yeah, we want to make this non-contingent. In order to make an offer non-contingent, the client not only has to have the money, for the down payment without the sale, they also have to be able to afford everything together. So that's two major things. Now, the one program I mentioned in the beginning, for those that were on the call, we might be able to get away with the whole carry both payments thing because we have that option. But again, that's only for bigger loans. So if somebody has a they want to buy a $500,000 house and they own a condo and they were going to sell it after, they still have to carry both payments as if they're going to keep the condo without rent. Or if they're going to rent it, we can get a lease. But if they're going to keep it and goal is just to sell it, you've got to be able to carry everything. So that's a two-pronged thing. I've had so many people call and say, can't you just remove this contingency? I can't, because your commitment is going to say it's contingent. Like literally when we issue the commitment on that loan, it's going to have a thing that says, we need proof of the sale of this home. So they're going to wake up anyway, eventually, even if we didn't put it on the initial letter, beyond the fact that it's technically fraud. So let's go over that. There are ways to get around it. We have bridge loans we can do that they can get money. We have this program that we could do where they can omit the payment. They might be better off renting the departing residence if they're having a problem with that, maybe for 12 months and just get a lease for it for a year, sell it a year from now. Those are all things that can be done. They can get a co-signer in order to be able to afford everything at the same time. And then if they happen to sell it, you can always remove the co-signer before the closing. Like there are strategies, but once you hear that contingency thing, that's a huge one for you agents beforehand. Just call on us if you feel like you're unconfident in the lender, the company, or whatever. That's a big one where we see so many mistakes made. So many commitments, so many pre-approvals go out not contingent when they don't qualify. So that's a big one. And then about in process, Mike, the next slide. Oh, there you go. That one I wanted. Yep. So some of the things that come up after. So this is on us more than it is you, but just so you guys know them, it can't hurt to warn them. You're going to get this deck, so like it can't be a bad thing. So clients open up new accounts without asking. It's not that they can't open new accounts. Like I just got an email from a guy saying, can I take out a car lease? He can, because he has plenty of income. All he has to do is document the lease for us and it's no problem. Like he can afford it. So that's not an automatic no. But what happens is if they open up a new account and it's right before closing, you can just add extra paperwork to them. If they couldn't wait, it's ideal to wait. But if it's something they have to do, they have to have an automobile because they're moving to the suburbs. They have no way. I understand. Just have them have the conversation. If you hear it, have them talk to us about it. That's one of the big ones. We've had clients that didn't pay a bill, ran up their credit cards, and then their closing gets delayed and their credit report expires. So we don't run the credit up front again, unless we think it's going to expire. And if we have a closing date that doesn't plan on it, there's no reason to run a new one. All of a sudden, the closing gets pushed off. Now we have to run the new credit. If they go late on an account, they have a collection from a medical thing, they ran up a bunch of bills, their score could drop 30, 40 points. Is it a deal killer? Not always, but it could affect their interest rate. And that's something that we'd have no control over afterwards. Major purchases, obviously, as long as they talk to us, that's fine. Changing jobs, we mentioned earlier. It's not that they can't change jobs, but if they do, they better qualify on their guaranteed income. So we have that conversation numerous times, and sometimes we have it after they've already changed the jobs. And that's more of a scramble, documenting it. So if somebody changes jobs or is coming into a new job, we document that by getting their offer letter. And then we have to verify before the closing that they are ready to start. So if they have drug tests, if they have any educational stuff they have to do, if they have to do certain things for citizenship, whatever, all that has to be cleared. And we have to get something from their HR that says they are cleared to start working if they haven't started yet. They are allowed to start after closing as long as they have that. If they've already started, nothing to worry about. We don't care if we don't have a pay stub, we don't have a pay stub. As long as the offer letter is clear and we're using the base salary, we can usually work that. And then if they're using a power of attorney, like if you know for a fact the client is traveling, they literally never ever tell us that they're doing this until like 2 days before the closing, that my wife's not in town, does she have to be there? And then we're scrambling to get a power of attorney. Not that we don't allow it, we allow power of attorneys, but if they're overseas, that is a pain in the ass to get. You have to get a notary at the consulate in some cases in order to notarize something. And that turns it into a major delay. So if you know somebody's going to be out of town, the client forgets, at least mention it. That way we can address it with them, figure out an easy solution, something that works, and then we won't run into any problems. Mike, you want to go back one? Cheryl, you want to kind of give a perspective?
I did. I just wanted to add a couple things for while you're talking about red flags. I know you mentioned citizenship. Many clients get confused, especially H-1B visa, because there's tax, they get certain tax credits like as a US citizen would. So they'll mark off that they're a permanent resident alien because in their eyes they are. So when you see that, you want to ask for the actual card because in many instances they're not. And that's okay too. We just need to get the right visa documentation. So that's one. Marital status, especially post-COVID, that's a big one. You open up the application, separated. What does that mean in New Jersey? Because we don't require a separation agreement. So in most instances, there isn't one. So for the application purpose, you're married or you're unmarried. Party to a lawsuit, that one's come up a couple times on declarations. So just, you know, you might want to, that's not often, but it has come up. So that might be one to mention. And then the big reason, especially on jumbo, that we really want to dive into assets and get our source of funds for closing as soon as possible is we're seeing more and more crypto. And some of our investors don't allow crypto. Thankfully, we have several that do. So again, we can work it out. We just want to make sure we locked that person with the right investor, that we knew that we saw that coming and that there's no surprises so that there's a smooth process for everyone.
I mean, that's more, yeah, all that stuff is all the stuff like what an underwriter is reviewing when it comes in and where a loan officer might miss it. Like everything she just mentioned, that's on us to get. That's not on the real estate agent to get.
Right.
But again, if you hear any of those things, you'll know it as a red flag that comes up automatically in your head. If they say, oh yeah, I made a bunch of money in crypto. Hey, by the way, this guy's made a bunch of money in crypto. That'll give me the red flag to ask, you know, up front. We'll get all over that thing to make sure if there's crypto funds, I know what products to put them in. It's more just hearing it so that you know like stuff that can come up. And then when you guys get denial letters from other banks, you'll know what can get missed. I mean, there's so many annoying things, right? Like somebody accidentally puts that they're married or something, or doesn't put that they have alimony or child support. I mean, there's a question they have to fill out on the application that specifically asks, do you have any alimony or child support? I've had people say no. And then all of a sudden we find out through some like search we do that they actually have it. I mean, it is hard to overcome a $2,000 a month debt that gets surprisingly added on day 30, unless they make plenty of money. Some people know what they're doing. They're putting no because they're hoping we don't catch it. Some people just are negligent. So like we do our absolute best to ask, obviously, so we don't want anything to come up later. You know, we ask about, you know, everything we possibly can. If we have a visa client, we're asking for their docs up front. So if you guys are wondering, why don't we have all these people that get turned down at the end? It's just like a neurotic carefulness you have to have up front. Like you just have to have such attention to detail to make sure it doesn't happen, or else it would. Like you can't be good enough as a mortgage person to avoid problems if you don't ask for details. There's no, you know, there's no level of knowledge or whatever that can avoid it. You know, we're all, you know, we're all guilty of it at times. Like we've forgotten to ask something where a client didn't disclose. Luckily, we've made up for it in every case. But yeah, I mean, it's, you know, it's led to some sleepless nights for me. And in some cases, it's the client 100% still leads to sleepless nights for me because I want them to close. And it's on them 100% what they screwed up when they were warned already or whatever. But it happens. So you know, you want people that can really move quick, like kind of like, you know, work through options and be problem solvers. So, you know, having that, to me, like having that lender that is almost like your consultant, as opposed to here's 4 names, call whoever you want. I get the whole liability thing personally. Like I know you guys don't want to be liable if some, but you need to have that confidence. And if you need to get a better relationship with the lender, cool. Like talk to us. If it's us, if it's somebody else, great. But have it be more of like a consultant, like your go-to. Like you have a question, you should be able to call me. You don't need a client to call me. You don't need, you know, you don't need to have a referral in order to call me. You can call me or text me anytime and ask me anything. It can be about a different person's mortgage. And if once we have that relationship, that's it. You know, so that's the kind. To me, that would probably serve an agent better than anything right now. If I was selling houses, that is exactly what I'd want. I'd want that person that knows the answers, where I'm confident when I leave that conversation that the answer I'm being given is the right one. And then if they don't, because I don't know every answer either, like when they come in, it's a changing world. They have a resource that they can turn to, which in our case is Cheryl, that can basically make the decision. So there's no question marks up front. I think there was a couple of people that came in. Yeah, Michelle, you really shouldn't use under contract. I mean, it can't carry weight because the appraiser can't really verify what the thing is sold for. They're not supposed to get a contract. So like, yeah, we really don't use under contract. I can tell you though, the one thing that's been helpful, because I know the market's obviously going up, is trying to use time adjustments. We're seeing more and more of that. Like the file I was talking about earlier, the other lender came in at like 440 and was using comps from 2021. And we appraised it at 510. It just came in today, which is the asking price. And the biggest difference was just using comps that are newer, ones that are, even if they had to go a little further away, they're more indicative of the current market as opposed to what was going on maybe in early 21. I mean, I think everybody will agree, like, I have not seen prices go down in the suburbs and they're only going one way. So if that's the case, like you can't, sometimes if you use something too old or too small, you can't possibly make up that difference by doing adjustments. Even a time adjustment won't make up the difference versus just using something that's newer. So you have to use something that's newer, if at all possible. So this way, like, you don't have those problems, but that's, we haven't had many, knock on wood. Obviously, we're not the appraisers, it's a third party, but luckily, we haven't run into a lot of issues. In Hudson County, I don't think we've had any significant under appraisals. I think we had maybe one or two in the suburbs on things that were going way over market. But overall, it's been, for the number of loans we do, like that's, I'm pretty happy with the results. Anything else, guys, that you want to touch base on? Anything else that you feel like would be a benefit? Anybody has an idea like where, that would benefit a buyer? Shoot, question.
Yeah, there's one other question. If you're using alimony as income, is that difficult?
It's not. As long as you've got a receipt for Cheryl, you can chime in on this, but 6 months receipt, consistent, no late payments, right? No 30 days, nothing that comes in 30 days late. And then we just have to make sure it's going to continue for minimally 3 years. So we do that by getting the kids' birth certificates along with the divorce decree, just to show that they're not going to be past the age of 18. And the big thing that I see sometimes is that the kid's like 16, the person receiving the alimony is like, yeah, but when they go to college, they're going to get it. We can't use that. It has to be guaranteed because we can't guarantee they're going to go to college. Can't see the future. So if they're, technically the kids would have to be like 14 and younger for us to be able to guarantee that 3 year continuum. So not difficult to use, but just have to meet the requirements. Anything else you guys have? Anything that's come up? In a condo market, like one of the biggest things that we have to do up front is verify the condo. I mean, we had that in our last training, but we had an issue with the video, which I couldn't send out. But like if you're somebody in Hudson County and I see a bunch of you on this call, do as much digging as you can up front on the tax records. At least you can see what's going on. You can see how many units there are. Try to get the management company or ask me about the condo up front, and I'll tell you if you don't have to waste your time because I have it all. If you shoot me a note and say, hey, we just got an offer that we're going to make, it's at 1500 Hudson. You don't have to check anything. I've got 1500 Hudson approved 100 times already, so there's nothing to check. You don't have to worry about it. You're off the hook. But if it's an 8-unit condo, you should probably just check in and see if we happen to have done any of those 8 units. Obviously, there's less trade, so there's less likelihood. And if not, those are the ones that are the toughest sometimes because they're kind of running without reserves. They don't care. Like they're trying to keep their maintenance low. They're trying to keep everything skinny. And if you're doing a 5% down deal or if you're doing a jumbo and their budget doesn't meet, you're not going to qualify. So those cases, like they'd have to take a higher rate or do a different type of program. So those are the ones where I think collaborating really helps. If you're picking up a listing somewhere, I mean, it's a quick email to me to say, hey, do you know anything about this building? I'm picking up a listing here. Anything I should ask for? And I'll tell you, like, get this, get that. And then you get it up front and be prepared so you can provide it to the buyer that you choose. At the same time, I can look at it and say, no one should have a problem with this building. Or I'll say like, hey, this is not going to work. You better make sure any offers you accept have a minimum of blank percent. And be very careful accepting offers from blank and blank. Because there are some banks that have their own freaking guidelines. They don't care that Fannie Mae is allowed to do a limited review. They want to look at budgets. They want to look at reserves, even with 20% down. And if that's the case, you got to make sure not to accept that because you're going to look bad as a listing agent. If you accept one of those offers and they die on the vine, not going to be great. I'm sure that's not going to be a tough conversation at that point when the buyer gets turned down. Again, they always blame you guys. And, so that's, this will avoid that. And it'll also get you very up to snuff. And then all your deals go perfectly. In the housing market, there isn't much, I don't think, just if there's an oil tank or something, obviously let us know. So that way I know to take extra time on the locks, things like that that could be beneficial. Communication is the key to everything. So don't assume we know something and that the client told us. Trust me when I say they forget everything. It never hurts to tell us again. I'll never be mad that you told us twice. So like it's better to have it. Then I can address that information up front. Deal will go that much smoother. Anything else I can answer for anyone? Mike,
The only other question,
hopefully we'll have the video for this one, right?
yeah, if anybody wants a copy of the video,
Definitely-
afterwards, just
definitely
shoot us
been
an
recorded,
email,
so
we
we'll
can
just
send it out.
to everyone that's on it, so you have it in case there's anything you want to touch base on. But to be honest with you,
Okay.
like as opposed to going through a 40-minute video or whatever, feel free to just like shoot an email, text to any of the team members that you regularly work with, and we can happily answer something for you, reiterate something. And really, like, Cheryl's appearance here was more like, people ask me all the time, like, how do you guys do what you do? Like, with so much volume, and then you don't screw up things. I mean, having great people helps. Having, roles like that. We have great processors that she's trained. We have her personally that we can go to whenever we have a question. When I say it's a huge advantage, like, you can't even imagine how much of an advantage to be able to talk a situation through and knowing that it's good to go up front. You have to identify those situations. So that's our skill, where there might be a red flag. That's on us asking the right questions. But then having someone that can get you the answer up front before going too late, so you don't stress out, you don't stress the realtor out, you don't stress the client out. Like, priceless, literally. So
I know I got disconnected too, so if anybody did have any underwriting questions, I'm happy to answer. But as Baret said, that I actually chose this. I was managing several branches, and Baret joined the company, and I was like, I really think we can do something special together, and I feel like we have. And that really is the key. It's just having most of the guidelines I know off the top of my head, but I don't take that for granted. So I've just become crazy within myself of just wanting to be so fast and being able to find guidelines really quickly and interpret them the right way. And if I feel like I'm wrong or the answer is no, I'm always going to get a second opinion, because I don't really like to say no. I'm not here to decline loans. Nobody is. That's what we're all here for. So I just can't emphasize enough that this is really a team that's going to give you a solid pre-approval, approval, commitment. You can feel good about the process and good that there's not going to be any surprises along the way within our control. There's always, the one-offs where someone just legit didn't tell you something, but even that, we're here to problem solve and get it done.
I think the key is going to
Any
be
direct
your help.
questions?
I was going to say, with
Freedom.
your guys' help, the key is going to be relaying that message to the seller's agent so they feel as confident with your offer, and hopefully that'll win a few. And hopefully by just being on this call, you can kind of like maybe use this to your advantage to say, listen, like, this is the deal. Talk to them, like, if there's a question mark, trust me, they'll ask up front. But now you guys know like how we operate, so hopefully it gives you a little bit of a background. And make sure, like, if you're not using us, totally cool. Like, this isn't meant as an advertisement for us, but in the end, just make sure you're using somebody who has this type of system, because if not, that's where you're going to see stuff start and end up unfortunately not closing in every case, or they have more blips than anybody else. That's not the norm. Like, I think the industry has gotten used to mediocrity, where people aren't accountable. They blame every human being on earth during the process, the closer, the funder, the freaking underwriter, this, that, my processor, just because they screw up in the beginning and don't ask the right questions. You want accountability. You want people that can truly stand behind what they're saying. And, with the resources we have no excuse. So to us, like, unless you just missed something, there's really no excuse. So, and everyone on our team has it. I saw a couple of people on the call that use different people in our office that are not even part of my team, but they're loan officers for Hoboken and Fort Lee. Cheryl works with all of them. So like, they have the same system I have. They have us as a resource. We want them to succeed as much as us. So if you're working with a different loan officer that's part of our group, no problem. But another branch, I can't say the same thing. So if you're working with a different branch of loanDepot, they do operate differently. We are our own thing. Calling loanDepot in corporate will be significantly different than calling us. So make sure when your clients are applying that they see my ugly mug on the bottom of that page, that they're on my website. Otherwise, it goes to corporate, it just gets distributed to whoever. And we've had that, unfortunately, numerous times and not realized it. And now I'm freaking, trying to figure out how to get that client back from that person because they didn't know anything about the condo. We had one recently where the condo actually got denied because he put the wrong program for the wrong condo. Like that was simple as that. And they thought they were getting me, and instead they got some guy Barry, and they thought it was the same guy. So it does happen. So just make sure they're physically talking to someone on my personal team, or that it's on my website that they apply. That's a key one. Just to, as long as they send the right link, they should go right there. But I've had some people just go to loanDepot corporate, not thinking it's the same thing, without even mentioning my name as the person, and it'll go to Never Never Land. Anything else, Mike, or no?
I think that's everything. If nobody has
Oh.
any other questions.
I think we're gonna probably take July off. Because it's right. Oh, I want to definitely. Is Scott on the call or no?
I don't think he's on today. No.
All right.
Didn't see him.
Well, Scott is actually one of our sponsors that helps us with the lunch and learns with Uber Eats. They're a great title company. If any of you guys are looking for a title company to pair with, or where you feel like you can provide some title orders and get the company with great service, those guys are fantastic. So we do work with them. They are great, and just want to mention that. Otherwise, I think we're going to take July off just because of the holidays. It's July 4th week. It's a big vacation week. And we'll send the invites out for the end of July for August. And we'll come up with a good topic that hopefully is relevant. Any topics anybody wants us to talk about specifically, by all means, let us know. I'd love to take suggestions, and we'll get the right people,
Yep.
third party to come in.
We're also going to be sending out a survey to everybody that was on the call just for the lunch and learns we've had so far this year to get feedback. So if anybody has any other topics or anything that you want us to cover, just let us know.
Yep. I mean, we can do stuff on FHA. We can do stuff on V. Like we've done a lot of them already. But anything that somebody was on, let us know. We're happy to help. Thanks, everyone.
All right. Thanks, everybody.
Yeah.
Thank
Appreciate
you.
you all coming on. Thanks for taking a little bit of your time today. Thank you.